So the stock market is crashing, and it is crashing bad. The S&P 500 down, what is it, over 10% this month alone. This isn't a normal market dip, this is a market crash. So let's first explain why it's happening before I tell you what I'm going to be doing with my investing portfolio, which is heavily invested in US companies and is being hit hard right now. We're talking over four figures. It hurts, I'm not going to lie. But it's all happening because of tariffs. Donald Trump announced a range of tariffs that pretty much hit the entire world, more severe on some places like the EU and China, but pretty bad on everywhere, more or less. That causes uncertainty, companies' profits. We're not so sure how profitable they are going to be anymore, and therefore prices in the market drop. Okay, now what am I going to be doing about this when it comes to my investing? Because like I said, multiples of thousands have been taken off my portfolio in literally the past 2 days. And this isn't the first time it's happened to me. When I started investing back in 2020, I got hit hard, 30% crash from the market from COVID. And this is a little bit less, 10% over the past 2 days, but it's still a massive crash. But when I started investing, I knew it was for the long term. I said to myself, it's going to be at least 10 years. That was my goal. And so I'm still sticking to that plan. We've still got 5 years minimum left inside of that plan. And the plan hasn't changed. Remember, when in doubt, you need to zoom out. You need to take a look at the big picture because the market has recovered 100% of the time. In COVID, it took 3 months. We're 2 days into it now, so who knows how long it's going to take to recover. But like I said, it recovers 100% of the time. So as long as you're a long-term investor, and that's been your strategy, the idea is to carry on. Some people even say to look at things like this as a market sale. You continue to invest every single month like you plan to do. So you buy when the prices are high, you buy when the prices are low, and it averages out that volatility. I saw another interesting analogy, which was, let's say you owned a house and it cost £100,000. If today you were currently getting offered £50,000 for that house, would you sell it? Probably not. You see, every single day you're being offered a price to sell your investments at. And if you plan to live in that house for a long period of time, you're not all of a sudden going to sell it today because it's half the value, are you? Think about your investments the same way.